These are absolutely the best investments you can buy into with your first $100. I know that there's a lot of you who are nervous about investing in the stock market, but I'm going to show you everything that I've learned so far in 3 to 4 years of experience so that you don't make the same mistakes that I've made. I'm going to show you where you can invest your first $100 and the very best investments where your money will not be at risk. This is the easiest, fast, and free way for you to get started investing. Let's talk about that. What's going on, subscribers? Welcome back to another brand new video from the Flaming Profits YouTube channel, where we teach you how to become a more profitable investor in the stock market. We're all about profitability. A wage will only make you a living, but profits will make you a fortune. So if you're interested in how to make profits in the stock market as well as through other investments, make sure you subscribe to the YouTube channel. That way you do not miss out on any brand new videos. Also hit the notification bell icon. That way you get notified as soon as we release brand new videos. Alright, so this is the best place for you to put your first $100. So this is a decent amount that a lot of people can get started investing with. This is why I picked $100. If you're interested in asking me where I would put $500 or $1,000, let me know in the comment section down below and I'll make a video just for you. But in this video, we're just gonna be talking about $100. So these are 3 simple reasons why you need to invest your first $100. One is because you're losing money from inflation. Yes, so every time you just hold money in your bank account, you're literally losing money. It's not a lot, but over time it can amount to a lot. And this is due to inflation. Normally over time, prices tend to increase. So the $100 that you might have in the account will actually be like $97 in a year from now. This is due to inflation, and inflation is usually growing every single year. So you're naturally going to lose money just by leaving your money in there. So you basically need to invest your money in order to keep up with the current value of your money. The second reason why you need to invest your first $100 is your bank isn't paying you to use your money. Do you know what your bank is using with the $100 that you have in your bank account? They don't actually keep your $100. It's just fake numbers that they put on your screen. You can access it anytime you want, but what they're actually doing with your $100 is they're lending it out to other people through home mortgages or car loans, and they're actually investing your $100. This is because they can make money from your money. So why don't you make money with your money? Why are you letting the banks do this instead? Number 3 reason, you are not appreciating the value of your money or receiving cash flow. So if you decide to invest in the stock market with the $100, you can appreciate the value of your money. So instead of 100, because you invested it into valuable stocks that go up over time in value, that means that instead of $100, now you'll have about 105 or 110 or even more. And this is due to the appreciating value of the stocks that you bought. And you're also going to be able to receive cash flow. This is money coming into you every quarter or every month through dividend payments. So some of these companies pay a dividend payment every single time they do their earnings, which is every quarter. So every 3 months, they're going to send you a paycheck to your brokerage. This is money that you can transfer to your bank account or reinvest it into the stocks that you already have. So it's a really nice thing. You should absolutely be enjoying these benefits of investing in the stock market. So you basically have to be the bank. Don't just use the bank. So 50% of it should be allocated to a very safe investment. This is a very good choice because especially if you're brand new into the stock market, you need to feel safe that your money is safe and that you will not lose value of your money. So make sure it is somewhere extremely safe where you will not see it go down in value significantly. And for this, I decided to pick an ETF, which is an exchange traded fund of the S&P 500. So this means that you're going to spend about $50 in a fund where all the Fortune 500 companies are in that fund. So you're investing in 500 companies by buying one stock. That's exactly what an ETF means. And you can do this. There's a lot of them out there. But the one I recommend for your first $100 is one called SPHC. I'll actually show you where you can invest in it as well. So don't worry about that. But the other 25%, which is equivalent to $25, I would choose any of these three stocks: AT&T, which is ticker symbol T, and then we have AFL, which is Aflac, an insurance company, and then we have KO, which is Coca-Cola, and those are the ticker symbols there. And I'm going to show you why I decided to pick this stocks for 25% of your portfolio of $100. The other 25%, I would pick either one of those that you didn't pick. So, for example, if you picked AT&T, for the other 25%, you can pick Coca-Cola or Aflac. And I'm going to show you why I decided to pick this 3, 4, 5, 6 stocks for you to buy into with your first $100. So before you can invest in any stocks, you're going to have to get a brokerage. There's a lot of them out there and a lot of them are very good. I'm going to recommend some later in this video, but the one I'm showing you here is Robinhood. And this is the ETF I was telling you about, SPHC. So as you saw, the 5-year chart shows a growing pattern. This is what you want to see in any stock you invest in. And you see that dividend yield right there, 4.17%. That is what they pay you in quarterly dividends as you hold the stock. So they're going to pay you every single quarter just because you're investing in that ETF. And right now they're paying 15 cents per share that you own. So every single share that you own, they'll give you 15 cents every quarter. Plus, you'll get to appreciate your value by holding this ETF. And this tracks the S&P 500, and it actually only includes the 50 least volatile names chosen from the S&P 500, 75 highest dividend yielding securities. So it's a very safe stock that will not actually go up that much in value. But I recommend this being 50% of your $100 because as a beginner, you want to make sure that you feel safe in the stock market, because if you put your money in a risky stock, you might lose a lot of it, and this can really disappoint you. So the next stock that I recommend for you to buy with your $100 is AT&T. This has kind of a cheap price, but it's a very good stock for what it is. Right now it's worth about $37. I have about 34 shares in this position, and I'm actually down in value, but you shouldn't be scared of it going down at all because you will be receiving dividend payments as long as you hold the stock, and over time you will be up on the position. It's just a matter of time. This is the buy and sell rating of the stock. So the buy, the bulls, so people that are for this company, they're saying the reason why you should buy this company is because it holds a broad array of content rights and has a strong reputation with the content creators. Within the wireless business, AT&T holds the scale needed to remain a strong competitor over the long term. Sprint and T-Mobile face a long road as they attempt to merge disparate networks and cultures. AT&T has pulled together assets no other media or telecom company can match. The firm has direct contact with more than 170 million customers across various products, providing an opportunity to build deeper relationships that drive increased revenue and loyalty. So now let's look at what the bears say about the stock. These are people who are against the stock and do not think this is a good investment. Let's see what they say. Supporting declining businesses like fixed line phone service creates a drag on profits that will only grow over time. AT&T's massive debt load and hefty dividend payout leaves little financial flexibility. The dividend will get cut at the first sign of trouble. Advancing technology will swamp AT&T's best businesses over the next decade. New wireless technologies will enable a host of firms to enter the business, commoditizing this service. Ubiquitous, high-quality internet access will allow content creators to easily reach audiences without the help of platforms like HBO. So there are some negative stuff about AT&T, but overall, this is a very good stock that I will still buy either way, and it's actually a dividend aristocrat. This means that this company has been continuing to pay and raising their dividend for more than 25 years. This is an elite status that not a lot of stocks hold, and you definitely need to pay attention to dividend aristocrats or kings, which is the same thing, but they have been paying and raising their dividend for 50 plus years. So as you see here, this is a dividend payment that I received and is still pending, but they're paying you about 52 cents per share. So they're going to pay me $16.12 just for holding some of AT&T stock. And AT&T is a holding company, so they hold many different companies, which engages in the provision of telecommunications, media, and technology service. It operates through the following segments: communications, Warner Media, Latin America, and Xander. The communications segment provides services to businesses and consumers located in the U.S. or in U.S. territories and businesses globally. The Warner Media segment develops, produces, and distributes feature films, television, gaming, and other content over various physical and digital formats. The Latin America segment provides. So another reason why I decided to pick AT&T as an investment for your first $100, that's because it's a dividend aristocrat. So they're going to continue to pay that dividend because they have the status of being a dividend aristocrat, and it's also a very safe stock. So I want to make sure that your money continues to grow over time with very little risk of it actually going down in value and scaring you of investing in the stock market. So now for the second stock I recommend, it is going to be Coca-Cola. This is one of the biggest holdings of Warren Buffett through his company Berkshire Hathaway. It's still relatively cheap. It's $57.01. It's a very good stock and has been existing for a very long time, just like AT&T has, and also it holds the status of being a dividend aristocrat. So you can't go wrong with either of these two investments. They're very safe and reliable and are always growing in value. So if you were to put money into this stock at any moment, you would have been up on your position no matter what through time. This is what I love about these investments. They're very reliable and safe. The dividend yield is about 2.77%, so they are going to send you a dividend payment every quarter as long as you continue to hold a share of Coca-Cola, and that gets multiplied by how many shares you have in total. It has a 59% buy rating from analysts, 41% say hold, 0% say sell. So like I said, very good stock. Let's look at the bull rating, why investors are really interested in the stock and would recommend you buying into it. Let's see what they say. By volume, Coke is almost 3 times the size of its next largest competitor in the global non-alcoholic, ready-to-drink market, which begets patently obvious scale benefits. The firm's vast marketing budget should help maintain consumer awareness and brand relevance. So not only is Coca-Cola a very dominant drink maker, they also have a very good reputable brand. And if you have an attractive brand that a lot of people recognize, it's very easy for your company to exist for a long time. The recent Costa acquisition should allow the firm to expand the trademark into other formats such as ready-to-drink coffee, which is one of the fastest growing non-carbonated categories. So this is fantastic. They have plans to continue to grow and are making acquisitions which should help the company in the future. So not only is it a good company, but they're continuing to grow, and this is a very good sign on why you should be investing into this stock. Now let's look at what the bears say, people who are against the stock and are telling you not to buy it. Adverse currency exposure has recently been an albatross on the firm's reported operating results, and there is no guarantee that this will not continue. So I guess some sort of currency manipulation that's affecting their profits. The firm is still disproportionately exposed to the soda category, which is facing secular headwinds in many markets. So because they're mainly focused on the soda category, people see this as a weakness. High growth categories such as water and ready to drink coffee have been more conducted to intense competition given the firm's relatively weaker brand equity in this market. So here's one of my dividend payments for a Coca-Cola share. They'll pay you about 40 cents per share that you hold of Coca-Cola. So you should be expecting about 40 cents if you own one share, and this gets multiplied by how many shares you have. So a description of Coca-Cola is a non-alcoholic beverage company which engages in the manufacture, market, and sale of non-alcoholic beverages, which include sparkling soft drinks, water, enhanced watery and sport drinks, juice, dairy, and plant-based beverages, tea and coffee, and energy drinks. They have so many brands, such as Coca-Cola, Diet Coke, Coca-Cola Zero, Fanta, Sprite, Minute Maid, Georgia, Powerade, Del Valle, Schweppes, Aquarius, Minute Maid, Pulpy, Dasani, Simply, Glasso, Bellarmine Water, Bonaqua, Gold Peak Fuse, so many. I had to give up on saying them. It operates through the following segments: Eurasia and Africa, Europe, Latin America, North America, Asia Pacific, bottling investments, and global ventures. The company was founded in 1886, so a very old company that still continues to dominate in the beverage industry, and they're also very well diversified through many countries. Not only do they have people buying their products in the United States, but they're basically worldwide from how many countries they operate in. This is very good, and this is why I decided that this company should be one of your investments for your $100. So now for the third individual stock that I recommend, this is going to go to Aflac. In case you don't know, insurance companies make a crap load of money. They make so much money from people paying them every month. They don't actually spend the money they receive through claims that often. Very little people actually claim from insurances. So this makes them have a lot of cash, a lot of money to work with that they use to invest and grow their company. This has a 2.06% dividend yield, 27% buy, 53% hold, and 20% sell. Let's look at the description of the stock. Before we get there, let me mention that they will pay you a dividend of 27 cents per share. So that's pretty good. You're actually going to make cash flow from the stock by holding a share of the stock or multiple shares. So Aflac, this is a holding company which engages in the provision financial protection services, otherwise known as insurance. It operates through the Aflac Japan and Aflac United States segments. The Aflac Japan segment offers life insurance, death benefits, cash surrender values. The Aflac US segment sells voluntarily supplemental insurance products for people who already have major medical or primary insurance coverage. The company was founded by John Amos, Daniel Paul Amos, and William Amos on November 17, 1955. So have you noticed how a lot of these companies are very old? That is why I decided to pick them actually, because they're very reliable and they're resilient. Can you think of how many recessions we've been in for all these three companies? They're still alive today. This means that they're able to grow through times and are very resilient. They're able to resist through difficult financial circumstances. So I believe that these are very good stock picks for you for your first $100 into the stock market. Not only will you feel safe, but you're actually going to make money. Let me share with you some special surprises. So you know how I mentioned different brokerages that you can use? Well, this is one of them. It's M1 Finance, and they're giving you free $10 when you deposit your first $100. And the great thing about M1 Finance is that they allow fractional share investing. This means that you don't necessarily have to buy the whole share of any stock. So Coca-Cola costs $53. You don't necessarily have to spend $53 to buy one share of Coca-Cola. Instead, you can just put $25 into Coca-Cola and it'll give you a percentage of the company, meaning a percentage of the dividends as well. So this is a great idea if you want to buy into all these four stocks that I mentioned. So Aflac, AT&T, and Coca-Cola, and the ETF that I told you, SPHC. you can actually buy into all these 4 at the same time. And then we have Robinhood. This is the brokerage that I was showing you. They're offering you a free stock when you sign up, so no reason why not to do it. The link is in the description, so go ahead and get your free stock. Robinhood is very easy to use, and they have a mobile app so you can easily trade on the go. You can look at your investments on your phone with the mobile app. And then we have a very awesome brokerage called Webull. They're actually giving you 2 free stocks. There's no reason why you are not getting your 2 free stocks. Just use the link in the description. You're missing out. I got about $15 of free money just by using the link. So I highly recommend it. The link is in the description. Go ahead and do it today. And then we have the Discover secured credit card. You get 1 to 2% cash back on every single purchase. And there's a $50 sign up bonus if you want to start building your credit and you want $50 of free spending money. There's a link that you can use where you get instant approval and you get all those bonuses from this link. So now that you know some brokerages that you can use to invest into the stocks, let me finish off by telling you even more reasons why you should invest into the stocks. So you see Aflac, it's been growing like crazy over its max chart. I always look at max charts because it's going to tell you the past performance of the stock and the entire history. So if it's uptrending like you saw how Aflac is, that means it's a good investment. So is Coca-Cola, a very good investment. It's always making higher highs. It's always growing in value. So in whatever time you would have bought your share in, you're always going to be up on the position over time. So this is a very good sign from any of these 3 stocks that I showed you. AT&T is also uptrending. They might have just had an issue when they first came out of the stock market because they went down by a lot. But ever since then, it's been recovering and going up in value slowly but surely. And all these 3 stocks are dividend aristocrats. So they've been growing and raising their dividend yield for 25 or more years. Now the last thing we look at when investing into stocks is its balance sheet. So this is going to tell you the financial health of the company. And it's actually very easy. Don't think that this is a very complicated thing. All you do is look up the company and then look up balance sheet next to it, and that'll take you to Yahoo Finance. This is the best platform for you to check this information. It's very accurate. So once you pull it up, you're gonna see different financial statistics of the company, but there's only 2 that you have to look at to make a good buying decision, and that's the total assets versus total liabilities. So let me show you where that is exactly. So once you look it up, you'll see it, the balance sheet. So let's go take a look at the total assets. They have about $140 billion in total assets. So this is stuff that they own that is growing in value over time. And then we have their liabilities. So as you see here, they have more assets and liabilities. And this is all you want to look at. Do they have more assets and liabilities? If they have more liabilities than assets, then that's a red flag and you should stay away from the stock. And the higher the number of assets, the better for the company, because that's actually what they own versus liabilities is what they owe. So you want to make sure that they have very little debt. So Aflac easily checks off our list. It has a great chart, it has a great balance sheet, and it's a very good company. So now let's finish off with the balance sheet of Coca-Cola. It has about $83 billion in total assets versus the total liabilities. So let's take a look here. So a lot less than the total assets. So this is a good sign, and this is what you want to look for in any investment that you make. So now let's look at AT&T's balance sheet, total assets versus total liabilities. And please do this before investing in any stock. Don't just assume things, make sure you read the factual information. So it has $531 billion in total assets versus total liabilities. Yes, so wow. Yeah, so a lot more total assets and liabilities. This is very good. So there we go. That is my recommendation on where to invest your first $100 and how to do it. This is the easiest and fastest and the free way for you to invest your first $100. So just to recap, 50% of it should go to an S&P 500 ETF like SPHC, and 25%, and the other 25% should go into AT&T, Aflac, or Coca-Cola. These are very good stocks, so they're reliable, and they have been checked off the checklist on all the requirements that we checked. And as a special bonus, all these 3 stocks are dividend aristocrats, so they've been paying and increasing their dividend yield for more than 25 years. Thank you all so much for taking the time to learn and invest into your financial future. Make sure you like this video if you learned something today, and if you appreciated this value and free content. Leave me a comment down below if you have any questions, and subscribe to the Flaming Profits YouTube channel. Please remember, a wage will make you a living, but profits will make you a fortune. I'll see y'all in the next video. Peace.